Hi guys and Assalamualaikum, I'm Syazwani Syahirah. So let's go to the topic on changes in real estate prices in Malaysia during COVID-19. As we know, the outbreak of the COVID-19 pandemic in the first quarter of 2020 continues to bring much uncertainty and more challenges in the property market. The partial lockdown, which started in the middle of March, has contributed to a decline in the number of home seekers and sellers. The property listings also narrow. During the various phases of the Movement Control Order (MCO) up to 9 June, processes like completing documentation and progress payment were put on hold as banks scaled down operation during the period. Also, we can expect that the developers and builders will not be able to complete their project or development within the time frame as supply chains have been interrupted. While actually is it too early to predict the quantum and economic cost by the COVID-19 on the property market, the transaction volume and value of the property will inevitably fall in the 6 months in June 30 this year. The president of the Malaysian Institute of Estate Agents MIA, Lim Bong Ping, said in an online exchange real estate forum recently that it is like that the houses prices in Malaysia will drop for the first time since 1999. So my opinion about the changes in real estate prices in Malaysia during COVID-19 is that now is a good time for people to invest in properties for long-term investors, for short-term investors or flippers. They need to stay away from the real estate game now. This is because investors in general will now be restructuring their portfolios to manage any risk. Meanwhile, those with leverage can take advantage of homes in the market that are priced cheaper than normal, as we can say lower than market value. For long-term investors who can afford it, are you someone who's able to weather a number of shocks? For example, property prices dip, but you can hang on till the prices recover? Or perhaps you are someone who's not looking to sell in the next 3, 5 or 10 years? If you can relate to the above that I say just now, then yes, it's a good time for you to join the real estate game. You see, actually not only are property developers currently adding value to their unsold property units to make them more interesting. Asking prices are decreasing and the financing environment is conducive. Interest rates will be very forgiving thanks to BNM's OPR cuts that we mentioned yearly, compared to the 8% to 9% or even double-digit rates in the past. The reintroduction of the Home Ownership Campaign (HOC) till 31st May 2021 also made it an opportune time to check out some properties. But for the short-term investors or anyone looking to flip properties, no. Please stay away from the real estate game as it's currently a tenant's market and price growth is moderating. Tenants are spoiled for choice right now. They are in a better position to negotiate for a deal or terms that are more agreeable to their side. Adding on that, the price growth has moderated in recent years, thanks to strict financial lending guidelines and the Malaysian economy moving towards maturity. However, if short to medium-term investor knows how to play their cards right, the current environment can actually be beneficial for the flipping game. You see, current conditions favor speculative investors as they have the option to secure good assets at a much lower value. The only risk factors they might face are finding the demand and racing against time. There's no locational or asset risk. Decreasing prices will lead to improvements in the rental yield, coupled with the low interest environment. However, this may be pronounced in the industrial space. Nevertheless, even for a cash-rich purchases, some investors may choose to option out of current purchases as the market sentiment continues its decline, losing their deposits and down payments. So that's all my opinions about the changes in real estate prices in Malaysia for COVID-19. That's all from me. Thank you. See you again.